Hey everyone, welcome back. My name's Levi Woods. This is Drawbridge Finance. We are getting into it. It is Tuesday. It's my favorite day of the week because I get to do this lovely live stream with you guys. It is July 15th and we are in it to win. You know, we're trying to make money on up days, down days, every day. That's the goal. Let's make money every single day. Right here, you know what my tagline is. Let's get rich together. If you guys want to get rich with me, shout it out in the comments. Let me know. Let's talk about tickers. I'm going to do a quick little market recap of what's going on, what I think is going on. And, you know, because we're all just guessing, aren't we? We got 50% chance, 50% chance of up or down, either way, at any point in the market, at any time. That's what our statistical odds are. What I like to do is put my odds slightly more in my favor and try to take trades that have a, 65% or 80% chance of winning, and instead of just that 50-50 shot that we're taking all the time. If you guys like that style of trading, let me know in the comments and get your tickers in quickly so we can get through this stream and we can come up with some cool trade ideas. Now, we're going to look at a couple of different things. I'm just going to load up. Yeah, I kind of have something fun to show you guys today. So we're gonna get right into it. Let me know in the comments. Oh, I see Terry's here, coming in loud and clear from Claire's home. That's awesome. I hope you're having as good a weather as we are. It's like plus 30 here again today. I've been out at the farm. You can probably tell from my tan. I've just been absolutely hammering at it. We sold a family property recently. I got less than a month to get everything out, and it has been just absolutely massive amounts of work. And I've been trading has been kind of relaxing lately. So let's get into what's going on in the market and take a look at things. So this is the S&P 500. We're looking at the daily chart right now. So each of these candles represents a single day. We can see we've been having a very, very good time. The market's been going up and up and up. Today, relatively flat, trading down at $6,265, just down 0.04%. Now, NQ up 0.58%, Russell down 1.25%. So let's just kind of scroll through these and see what kind of price action is happening, because you can see both the S&P 500 and the NASDAQ are right near the top of their trading ranges. So this, there's a Japanese term called a dumpling top. And I don't know if you guys have seen this, but this is kind of what can happen. Typically, a dumpling is shaped like this. So that is what we may expect to happen. You'll also see that we have a large point of control here over the last couple of weeks. The buying has thinned out, so to speak. We also have very little volume in this range where we shot up, which means that if there is any sort of correction down, it's very, very likely that we'll come down to this 21,400 level. That's kind of where the point of control is right now. So that's the levels to watch for on NQ. Now, Russell, we're doing similar sort of thing. We're closer to the VWAP. So if we can break out, we should see some continued upside momentum. This will continue up. Now, small caps, this is rotational. So when we're looking at things, this is our big stocks, big indexes, and Russell is the small caps. The money has to flow kind of back and forth between them. So that's why my expectation when I see SPY and NASDAQ at the very top of the range, and I see Russell down here in the middle, that there may be some money flow one way or the other. Dow Jones Industrial Average somewhere in that upper range as well. So I would be looking for a little bit of bearish sentiment on the Dow Jones as well. VIX marking very low. We're below normal averages. We're at 16.93. This is an okay range for us to trade. It means that I'm looking for limited loss trades. I'm looking for opportunities to enter. What I want is volatility spikes. So I'm looking for days like this where we see the volatility spike up into the 20s. Those are opportunities to put on new trades. This is typically when we see a down move, and that could happen anytime here. So I'm keeping some powder dry, so to speak, and saying, hey, what happens if the market comes down a little bit? Oil has been trading in a range. We see a little bit of softening happening, trading below its VWAP, point of control down here around $60. Now, I like to enter trades if oil breaks below $64. That's when I like to put on puts, and I like to sell puts at the $60 level. That's kind of how I like to play oil in general. So right now, sitting on the sidelines. Gold, this range, as you can see, has been continuing upward. We have this upper channel and we've had support across this line that I've drawn on here. And I drew this a while ago, and we just continue to bounce off of that. But there is a point of control way down here, 2,600 an ounce. That's $700 below the current value. So if we did see a move down in gold, it would be very, very abrupt. Now, I'm not expecting that. I think that the bullish momentum is going to continue. So I am looking to play gold with a little bit of safety and, you know, playing relatively neutral in that kind of range between that 3,600 and around 3,100. That's my expectation for gold. Silver, the last couple of days spiking up to all-time highs. We're trading at almost $39. Yeah, broke over $39 an ounce yesterday. So the first time ever, pretty awesome. But you can see we're very overbought on silver. So the point of control down around 32. I would be playing this slightly bearish, again, with the thought in mind that metals are going to continue their upswing. They're due for it. You know, this is a cyclical thing. If you go back with enough time, you'll see that we have cyclical markets, and the expectation is that silver and gold and other metals will perform very, very well. Apple today actually up a little bit. We talked about this last week. On Tuesday, we talked about how it was in this lower part of the range. I'm going to just zoom in here so we can see what's going on. And so last Tuesday, which was, what was the date last week? The 8th. So we talked about, we were having a little bit of a down day, and the expectation was a little bit of a rise moving up to the VWAP. This is a continuation. I expect to see more bullish action out of Apple. We haven't seen the breakout yet. AMD continuing that motion to the upside. We talked about this last week as well. What else is going on with some of these stocks? Hood still in its bullish trend. You know, it's hard for me to play these trades. I don't love to jump into stuff that's so broken out to the upside. So I'm looking for pullbacks on these, and then I will look to enter. And what else do we have? Andrew's talking about Visa earnings. Easy Money says, good morning, Levi. Any thoughts on home builders, PHM or TOL? Also, what is your favorite Mag 7 stock? You know, I love trading Apple. It's one of my favorites. NVIDIA has been, NVIDIA is a bit tough because when it runs, it really, really runs up. You know, the moves are quite extreme. And as everyone probably knows, I'm a very neutral trader. So what I want to do is I want to assume that these are going to stay in the range. And you can see that NVIDIA breaks out of that range quite frequently. When you compare that to Apple, you know, the drawdown here recently this year was quite extreme, but for the most part, it stays inside of its expected range. So I like to trade Apple a little bit more than I like NVIDIA, but that doesn't mean that I don't play both. What else do we? And Tesla is so whippy all the time. You know, the moves are so extreme. I'm taking a bullish stance. I think at some point Elon's going to step back into Tesla. I think that the AI that they are generating and the data collection that they're getting from their cars is absolutely stellar. I think that we're long term, we're going to see bullish movement on Tesla. We just haven't seen that because of all the recent stuff with all the policy and you know, government stuff that's going on with Elon specifically. But I think the company is poised to make tremendous returns long term for shareholders. So let's look at Visa. We'll look at the earnings are coming up. We've got earnings coming up the 29th. One of the things, I'm going to show you guys a little subscription that I have been using. So let me pull this up here for a second. This is to a company called Orat. So I'm going to show you what their strategy does. I know you guys can't see it yet, but we'll get it here in a moment. Okay, so this is a company called Orats. They are providing this information for me for free. So this is something that if you go over and check out their services, it's a very, very complex dashboard that we can use, which is pretty awesome. I have just searched for Visa. And one of the things that's interesting about their particular service is that we can see things like selling, you know, CEOs or not CEOs, not CEOs specifically, but management having buys and sells right on their chart, which is pretty cool. So that's one of the things I like to look at. You can see here, you know, this guy Paul back in June sold $17 million worth of stock. Those are pretty substantial sells. And what has happened to that stock price after that? We have seen a slight, well, we saw a fairly major decline, and then we've seen definitely trading at lower levels than we were when almost all of these sales were happening. Now, some of these smaller transactions, a lot of times when we look at this, these are $0, 3 million, I mean, still relatively large. A lot of these transactions are actually the way that the management gets paid. So they might get paid some stock, and then they may sell it off immediately on the same day. So it's something to continue and something to look at. One of the cool things about ORATs is they have like a quantitative outlook. So when we click on Visa, we can actually, it'll run a predictive analysis here, and it will show us a couple of things. We've got next earnings coming up July 29th. We've got the dividend coming out August 11th, and we can see that we're what kind of outlook the AI algorithm has. So it's neutral on stock price and bearish on IV, which means we're looking for IV contraction over the long term. We can see contango, and we can see the IV term structure. And we know that we're on August 1st, we've got a large amount of IV happening. We can see that spike here. So very, very complicated setup. There's for those of you who are looking for like super detailed information, it's amazing really what is here. Is it easy to use? I would say it's probably not as intuitive as I would like it to be, but what we can do is we can look at the chain, and we can actually see, you know, whether or not we have heightened IV skew, and we can see that here. This is the August 1st date, so right after the earnings. How do we set these up? What can we do? Well, one of the cool things about this particular software is that we can take advantage of a probability of profit, and we can build a trade, and we can analyze it. So let's just look at the chain for a second. I'm going to turn myself off. We can take a look at this. Now remember, Visa's trading right now at 348 a share. So what we might do for these types of trades is we might decide to sell a put. Now, selling a put, I've just clicked on it here for $525. This is going to give me a profit profile that looks like this. We see that distribution. If the stock stays above the short put at 340 strike by August 1st, all of the value from this is going to be gone. So the amount of credit collected today is 537. We can see that right here, and the profit profile is here. We can see this. So we make $537 as long as the stock stays above 340. The cool thing is it actually integrates where the stock is based on option pricing. So we can see this chart. It's kind of grayed out in the background. And what that does is it gives us a probability of profit of 84%. And this is what I was talking about earlier about taking on trades that have a high probability and using our money in a slightly leveraged way. So how much can we lose off of this? Now, theoretically, the strike is $34,000 is how much. So the max loss on this particular chart is showing 3,049, but it would continue down to the downside on here. This is a rather large trade. What we typically do with these types of trades is we define the risk in some sort of way. So we may purchase, and I can just click on the chain. I might purchase a 305 put. You guys have seen recent videos that I've done on a trade like this. So what I'm doing now is I have a max loss of $3,050, sorry, and I have a max gain of 452. So I can see my risk to reward. I'm risking 6.7 to make 1. I have an 82% probability of profit. One of the cool things I love about ORATs is this showing whether or not I have a distribution edge, a forecast edge, or a smooth edge, which is pretty cool. So what this shows me is, and it charts it out here, I can actually change my payoff analysis. What if the IV changes and the days to expiration decrease? Now, in this case, because this would be an earnings trade, we would have to assume that we're going to be in a position where there's a we have to, sorry, the IV is going to stay elevated, where our IV is not going to drop. So even the one day before here, if we have no IV change, if you notice, this chart doesn't adjust very much at all. We're very much playing this as an earnings trade if we were to enter a trade like this. Now, the other thing I can do is I can just adjust my strike, and I can adjust my amount of risk. So if I wanted to take less risk than the $3,000, and right now this trade has a max width of $20 or about $2,000 to close, and it still collects a credit of $3,065. This is an incredibly large return on capital, but it comes with a little more risk. We can see the probability of profit, 81%, max gain 365, max loss $1,640. Distribution edge 38%, forecast edge 21%, smooth edge 166. Pretty cool, right? What do you guys think of this? Has anyone used ORATs? Have you checked out their website before? Have you even seen it? I've been using it for a little while now, and it's been great for this type of trading where I can like really kind of dial in the specifics of what I might want to do and say, well, maybe I would like to play some really aggressive positions. Oh, I adjusted that the wrong way. Let's look at this. What is this particular position? We've got, this is a bearish position on Visa. If I was betting that it was going to go down, which I wouldn't be, we can see the probability of profit is only 33%, max gain 327, max loss 173. And we can see that risk reward built in, but the distribution edge is poor, forecast edge is negative, smooth edge is 0. So this is showing me that it's very unlikely that this would be a successful trade based on all of the underlying positions that are going in there. Now, if I go down to like a 330 put, and we just do this as a credit put spread, this is a 20% return on capital. And we can see we have a forecast edge, again, positive forecast edge, positive distribution, 78% probability of making profit, max gain 233, max loss 763. This is a risk reward of 1 to 3. So we can put these types of trades on. Now, the other thing I can do is I can actually put on a position where I'm looking at the strike price and saying, okay, 348, what if I thought it was going to go up? What could I buy here? I might go on the call side and I might buy, let's buy the 350 and sell the 355. And what that's going to do is it's going to cost me a little bit of a debit. In this case, my credit to open this trade is only 4 cents. I have a period of space here between my shorts, between the 340 and the 350. And so this is the short put, and sorry, not the shorts, between the 340 short put and the 350 long call. And that period of space, or that zone, doesn't make any money because I'm not collecting a big enough credit. But what this does is it gives me a larger max loss. So now my risk to reward is now 1 to 2. I can make $500 on a $1,000 risk. So I've got max loss of 996. I've got a max gain of 504, 20% probability. Forecast edge distribution edge of 20%, forecast edge 22%, smooth edge 0.67%, probability of profit 66%. This is right in my wheelhouse. If I was bullish Visa and I thought that we were going to go up. Now, we can even make this more complex, or else allows us to go up to six legs. So what happens if I think that it's not going to go above a certain level? What if we were to, sell some credit above, maybe at the 380, I could sell the 380 and buy the 385. This gives me another $20 in credit. And what that does is it gives me an extremely large profit tent to the top side. So we've got a max gain now of 536. That probability of profit has increased another 3%, so 69%. And I have a very wide range from 355 to 380 where I could make up to $500. I can adjust this up. So let me just turn this off. I'm going to just click on the opposite here. I can maybe I think that Visa is only going to go to 365. I can sell the 365, buy the 370. Now I'm getting a max gain of 593 in a smaller zone. I have a 74% probability of profit. I've reduced some of my downside risk. I have a max loss of 907. My risk to reward is 1 to 1.5. It's pretty amazing. So if I'm looking for those types of earning trades, and I think I'm looking for a binary event, this is all expiring August 1st. This is the type of setup that I might do, where I'm buying a call condor. I'm buying a $5 wide call condor and financing it with a bullish put spread. So what do you guys think? What do you guys think of that type of trade? Let me know in the comments. Visa protection for long position calendar put. Sure, let's look. I don't love playing calendarized puts over earnings. It's not my favorite. But let's take a look here, and we'll look at the probability here. I'm going to clear this off. Say we're on the August 1st. Say we were to sell the 345, which is basically at the money. Maybe that's not the right one. Maybe I have to go. We're trying to get a little bit of protection in here. So I do the 335, and then I go out in time and I purchase a longer dated, say August 15th. I buy that calendar, and so I'm going to buy the 335 on this later date. What that's going to do, I'm going to delete this one. I'm just going to turn this off for now, which is cool. You can just turn it off. You don't have to delete. But in this, maybe that's confusing. I didn't mean to put that on. Let me just go back here and take it off. The August 1st date, 18 days away. I'm going to go down to the 345. I have one selected. I'm going to click on buy to reverse that. So this is a calendar spread, and we can take a look at this. Now, the issue with this is very, very inexpensive. The current price is $1.35 debit. And that means $135 is my max risk if everything expires worthless. Obviously won't be, there will be some value, you would think, in the 345 call for the August 18th date once the August 1st expires. So there could be some extra potential in here. And I probably am not risking that whole 135 unless the stock goes way up. If the stock goes way up, say we went to $400, then yes, I would lose that 135 because the long call wouldn't have any extra expectation. The probability of profit on this trade is only 40%, and it's because I'm playing to the bearish side. So this is the type of trade that I might want to couple with that trade that I showed you before. The problem is that the credit I was collecting on that trade before was not that great. So I can use it, but when I play both sides of a trade, both up and down, I'm often negating the gains. And this is where being directionally correct makes traders that make the most money. That's where we have to be. We have to be directionally correct more often than we're directionally incorrect. The risk reward, potentially making 3.3 to 1 risk, max gain 449, max loss 138. But it's this probability of profit that I don't love, and the IV contraction that is for sure going to happen. So when we look at this, I'm going to turn myself off again here. I want you to pay attention to this little curved line in here. That's kind of our profit profile if something was to happen today. So let's say we go out and we're on day 18. That's where we would be. You can see how that line is adjusted. It's now conformed to this trade. Now, that's showing that the time is decreased, but what it hasn't accounted for is the IV change. We know that there's going to be an IV change. This will happen for sure. Why do we know that it'll happen for sure? Because at expiration by August 1st, there will be a earnings release that will come out and the IV will drop. So we have to program that in. We have to pull this down and say, how much does it drop by? Currently, it's currently 29.6, and if we adjust it to 12.6, so that should adjust our, showing still that we have large gain. And a very, very cool setup. Like, they obviously have spent a lot of time and energy and money to get this to show this level of detail. my assumption with this is that even with this IV drop, I think that the amount of money to be made off this trade with 16 days to go would be lower than this. So although it's very fancy, it is, my gut feeling on this is not showing quite correctly. And this is one of the problems with diagonals and calendars over earnings. And we've all experienced that. You chart these out and you're like, this is for sure going to be a winner. It's like 99% chance that I'm going to make $1,000 on my $100. And in reality, it's like the $100 just like mostly goes away because the IV crush is so large on those positions. Hope that helps. Let's take a look at some of the other stocks that came up here. We're going to take a look at Easy Money asking about PHM. I don't know this stock. What is this? Consumer discretionary household fair value 27% higher than current. I like that. Today it's down 3.76%. Let's look at the range. Up in the last 10 years, it's made 500%. In the last year, we're down 5.95%. We've got aggressive share buybacks happening. Raised its dividend for 7 consecutive years, and it's trading at a low price to earnings ratio. Now, analysts have revised their earnings downwards for the upcoming period, which is bad, but this is looking pretty good. Financial health showing a great performance here on investingpro.com. I do have a link for Investing Pro. I also have links for any of the other things that I promote. So if you guys are looking for the stuff that I'm using, I'm often showing paid platforms because I have access to them. If you're interested in, make sure you use those links below because it actually gives you a discount. It helps me a little bit because they continue to provide me with data, which I can then provide to you. And then this is back to that whole thing of let's get rich together. We want to work together to combine our resources, and that's why we do these live streams. So clear that off. We've got the fair value marking at 138. Nice little play there, and I'm gonna write that one down because I'd never even heard of this. So I'm gonna do a little bit more research. Always do your research before you're buying anything. But PHM, thanks so much for that easy money. What else are we looking at? Let's look at TOL and Toll Brothers, and fair value 36% upside, 11.14 right now. Sorry, not 11. $114 a share. Day change 387. All of these little bullish indicators here. So very nice. Let's look at the 1 year chart, down 6.34%. We've been in a nice little recovery since this Trump drawdown that we saw from January to March. And so over the past 3 months, we've just been absolutely in an up move. This would be a very nice little trade. And again, financial health, looking at great performance, which is one of the things that I really am looking for in today's market. If we have any sort of interest rate changes, I really want to make sure I'm investing in healthy companies. So I like both of those. Investingpro.com showing, or investing.com. The pro is showing that the fair market value is higher than that. So hopefully you guys are checking that out. What about home builders? What is the ticker for home builders? I can't remember right now. Why can't I remember what home builders is? It's gone from my mind. There is an ETF. I can't remember what it's called though. So, but if you guys are interested in that sector, there's an ETF out there. John Blake says, happy Tuesday. Happy Tuesday to you as well, John. Dennis Ziza says, very powerful. Yes, that ORATS thing is pretty cool. Easy Money says, Levi, what are the criteria for buying leaps? Thank you. You know, I don't love leaps. You know, there's tons of people that are out there. The problem with leaps, and I bought some this year that quite stung me, is that when we're buying a leap, we're getting a position that has decay in it, and what we're trying to do is we're trying to finance it with a shorter duration call that caps the upside. So we end up with a position that has quite a bit of risk because we've paid a lot for the long-term investment. Now it's leveraged, which is great, but the decay is against us. Let's just look at Toll and see what kind of setup we might see if we were to look at like a leap position on Toll. So we wanted to be long, and what are the parameters that we might be looking at. So we're going to look at the options chain. We're going to, first of all, let's click on the outlook over here. That'll be kind of interesting to see what the outlook is based on another service. And this is what I often do is I'm combining multiple services. I'm taking a look at the price. While that loads, let me just take a look at this. ORATS is pretty powerful. So it is some of the stuff that it runs, it takes a little bit of time. So I have to be patient with it. Now, total, we can see here, we can see the point of control around that 106 level. We're currently trading around the 115. We've definitely been in an upward trend. We're below the VWAP. We're inside the range. We saw a strong move from the up to the down, but we're seeing that fairly typical from the just the way the market was this year. So are we going to see a continued upside from this stock? Possibly. This is where I might consider a leap in general. We're below the VWAP. I might want to do it if the stock was a little bit lower, but we're actually having a pretty good pullback today. So how I might get into something like this is I might start very simply. So this is neutral on stock price outlook and mildly bearish on IV. So we're looking to sell premium against this so that there will be IV contraction. And the term structure, we must have something coming up July 25th. There must be earnings coming up. And we can see that here, July 19th of 2025, 35 days. That's August. Oh, right. So we're looking at, that's July. Why is there so much IV terms here? That's high. So these are only monthly contracts. We'll look at the trade builder here. We can see where, again, management was selling. These are often an indicator that stock may go down. We see some selling last year, and there's been no selling recently. So it's always interesting for me to look at these in the real time and say, hey, here's a cluster of selling. The stock did go up, but it ultimately came down. So what was going on? They also knew back here. We saw some selling pushed up, but this was way smarter to get out here than to get out here. And now we're not seeing any of that selling occurring over the last little while. The last sale was back here, February 25th. And it was a $46,000 trade. And again, the size of the triangle matters in these types of things. So if we look at a bigger triangle here, that's a $4 million trade. So $7.5 million trade. So the outlook for, if we were to look at August 1st, we could say here is the expected cone, and we can see that charted on here. Again, very cool graphics that ORATS has. So we've got that 125 on the top side and then a 105 on the downside 18 days out. So let's just take a look at the options chain and see what we might do. If we were to do the August 1st, can I get enough money from selling the 105 put? Can I make enough money by doing this that I can actually get something here? You can see that the spread is very wide. We're looking at the zero bid and a $1 ask. Means we're mid price is a 50-cent credit. This is not a great position. Look at the amount of return. Like basically we're trying to make 50 bucks. We have a max loss of 184. We have a probability of profit of 88%, but not a very good trade. What I would want is I want something that has a little bit more open interest and has a tighter spread. And specifically, I'm looking at the difference between the bid and the ask. So when I compare those two columns, I'm saying 130, 150, that's pretty wide. That's 20 cents wide. 155, 175, also pretty wide. So this may definitely not the type of product or underlying that I would want to do on a spreads of any sort, because when I'm buying a put and selling a put as a spread, I'm paying the spread difference on both. And so it really puts me in not a very advantageous position. I'll show you an example of that. Collecting 105, what if I was to define the risk and buy the 100 here and do this as a spread? Well, you'll see that the reward, the max gain now is 25 bucks. Max loss is 475. I have a risk to reward of 1 to 19. Just not worth it. It's 88% probability of profit, but I have one loser, it wipes out 19 winning trades. I don't think that's the way I want to trade. What I need is bigger returns. So this might be a candidate for longer term leaps. And what we'll do is we'll go out here. We'll say June of next year. This is 339 days. So almost a year. We should probably be a little bit longer than that. September. Typically, we're buying about a 90 delta. So if we go down to the 100 here, this is a pretty typical, where there's a 72 delta. I don't know why it doesn't show it here on the chart. I wish it did, but we can see it once we load it up here. So this is 72 delta. I would actually want to buy one further in the money. This is 85 delta. We got to be getting close now. 88 delta. So this will give us a potential upside. Now, the thing about this is I'm doing I'm distributing in a way that I will make some money. The problem is I've got decay on a leap, and that decay makes my probability of profit actually less than just buying stock. I have now 44% probability of profit as opposed to 50% probability of profit if I just bought the stock today and thought it was going to go up. Part of the reason for that is because there's a bit of decay that occurs. So how do we get away with that or from that? Well, what we can do is we can sell short duration positions against this. So I might go out a month and say, you know, I'm trading this as a leap that's doing the 175, or sorry, the 75 strike, stock's trading at 114. What if I was to cap my profits and sell this as a poor man's cover call, where I'm selling a 130 call? What that does is it's going to increase my probability of profit slightly, 46% compared to that 44% that we saw. Our max gain now is capped. We have $1,280. Our max loss is $3,019, based on the fact that we can't go lower than the cost to enter the trade. Now, that's actually outside of the range. The max loss on this trade is the full debit. So I could buy this share and have a max loss of $4,488. And that's where leaps can be dangerous. If I was looking at this and I had a $100,000 account, I might look at it and say, okay, well, I'm only risking 5% of my account. And I have slightly positive theta decay in this case, but I don't have a lot of downside protection. This is a lot of potential risk for a nominal amount of gain. These trades, if they're too heavy, can be hard on us, hard on our accounts. Now, we can actually adjust that by moving to a less aggressive position. Say we sold a tighter strike, maybe even in the money. What if we sold the 110 call, which is basically at the money? It's just slightly below. The debit is considerably less. So now I'm paying only $3,700 for this. And I have, again, less max gain. And this is one of the issues. So we're doing this balancing act of like, what if my max gain is only 186 bucks? That's not really worth it. Even though I've increased my probability of profit, I'm setting myself up for a position that is very unlikely to make money because of the way that I've structured it. Now, I could just buy a higher strike call. And I could actually go to the other side and I can say, well, what happens? What does this look like? What do these trades look like? Well, now my max gain is considerably bigger. My max loss is 134, and it changes the overall delta of the trade. My probability of profit is actually increased. And as we do that, we can kind of find a sweet spot potentially where we can say, what if we did this as a calendar? And this is where calendars come in play very, very nicely. We have a max gain of around $300, max loss of around $1,000. So max profit is around 30% of the total. Something to think about when we're trying to build out these trades in general. And we can manipulate that type of credit or loss based on what we're seeing here. This is where double diagonals come in quite frequently, where we have, we can do it with all calls if we want. This one's a 110, 100 long, 110 long and 100 short. And if we were to do an out of the money on the top side of that as well, we are in a potential situation once we've done it as a double, where we have a wider profit zone. And this is where Oryx excels. We can really see, like, these are not smart trades. This doesn't work out very well for us because we're paying too much for those leaps. and we're getting a very, very, very small return on capital. So again, timing, but then using tools to really analyze the types of trades that we're putting on. Kevin's asking, what do I think about TTI? Let me take a look right now at TTI, and we'll... Yeah, ORATS is very, very powerful. I see somebody is, John is saying that's an awesome program. We'll look at Tetra Technologies, Wall Street rating it a strong buy, quant ratings a hold. Right now I've got, this is Seeking Alpha, so we'll look at the summary here. On the 1 year chart, down 7.26%. So this is a minerals project. I'm assuming this doesn't pay any dividends. Where's oil and gas, equipment services, interesting. Ranked in industry 30 out of 45. Let's look at the 10-year chart. It's the type of thing, this is where I would like to have like neutral trades, you know, like very rarely does this thing spike. It just kind of trades sideways. And, you know, even stocks, like one of my favorite stocks right now is Mara, because even though Bitcoin has been on a wild ride this year, Mara itself is actually fairly range bound. It's pretty awesome little trade. Trading at 1878, just absolutely crushing it, making over 50% a year for 2 years in a row on a stock that on the last year is down 23%. And I made a 50% return. So far this year, I'm up 20%. The stock's up 20, just about 12%. So I'm doubling the return of the stock by holding and selling covered calls against it. It's so dead simple. And it is one of the major trades that I've been putting on in my Discord service. So if you guys haven't joined that, check it out. That's in the dividend tier. We have some exciting changes coming up. So there's going to be some changes to Patreon. I would highly recommend, if you haven't joined now, it would be a very good time to consider joining one of the tiers, because the changes that are going to happen are going to be kind of amalgamating some things, making it a little bit simpler to sign up. But if you have been considering it, if you've been sitting on the fence, know now that there are changes coming and that announcement is coming, but it is a very good time to sign up because constantly changing. I'm working with a marketing guy right now and looking at how I can kind of structure to make the best use of the resources that we have so that we can provide as much value in the members area and still be able to run it as a business so that we can generate enough profit to actually pay for itself, because these things don't, you know, I wish it was all great and I could just do this for free, but that's not the reality of it. It's there has to be some expense in order for me to provide the service that I do. So that's what we're working with right now. Maybe one day that'll change, and that's kind of why we're making some changes now, hopefully to be able to provide better value for those people that have been around for a long time. Because that's one of the things that I've always prided myself in is like, if you guys sign up at a rate, then there's no increases over time. And I've done that for years. I don't know if you guys remember how low my prices were 5 years ago during the pandemic, but there are people that are still taking advantage of those prices because they signed up and they continue to be part of the community, which is pretty awesome. So if you're considering it, great time to check it out. You can head over to patreon.com/drawbridgefinance and check that out there. Let's look at TTI here. We looked at it on Seeking Alpha. We're going to pull it up on investing.com. Leave that up there for a second, but TTI. So fair value 448, currently trading at 338. Liquid assets exceed short-term obligations, strong return over the last 3 months. Analysts predict the company will be profitable this year. That sounds fantastic. And, you know, this is really like, everybody's doing this. We're all looking at the same sort of thing. So this becomes the gospel. The more information we have, the more things we're looking at, the more likely that these are going to come into play when we see that. One of the things that's very interesting, what was the stock? Can't remember. Okay, I'm not gonna tell this story because I can't remember off the top of my head. TTI bullish, but I would definitely be looking at playing options on that on a neutral bias, because if it stays range bound, even with like a covered call strategy, may work out very, very well in that case. So let's look, let's look at the options. How much can we collect? We're looking at Mara here, but let's look at TTI. TTI, let's see if I can type. So it's a hold rating, and the options here. If we look at the $4 strike, we're getting 2 cents for the July. If we go to August, 20 cents. Yeah, so tons of value there. If we could get 20 cents for this, the return on capital is huge, 20% on $338. So there's low volume, and I want to get like a very, very decent price, but that's the type of thing I would be doing, looking at the covered call strategy or doing puts, selling this put for $3 put and collecting 11 cents with a month to go. Making 11 cents on a $300 investment is a massive return. That's 3% a month or 36% annually. And worst case scenario, you're buying stock at an even lower value than it currently is. 11 bucks doesn't seem like much, but as long as you're in a low commission brokerage, it can work out very, very well. What else do we have? We've got thoughts on Amazon. Amazon, I'm still slightly bearish. Just based on the chart, if we look at Amazon, we've got the summary here. The quant rating is a strong buy, but when we look at the 1 year we're 17. If we look at the chart on Amazon, I just want to show you comparatively to the VWAP. So here we are. This is where, with Apple, I was saying I'm slightly bullish. The way I would play this is I would be playing some sort of profit target that isn't for sure above this 206 level. That would be my zone. There's tons of volume here, so I'm not worried about volume. Let's just zoom in and we'll look at that volume again here, which will be slightly lower. When we get down to that 204 level, there's lots of support here, lots of volume. That's the largest, that's the point of control. If we zoom into just this area, you'll see that there's, we're going to adjust there. That's that level around that 204 level is very, very strong. So I would play this with a slightly bearish slant. Earnings coming up, so no diagonals, no calendars on that. What I would do is play these as put spreads, and I would wait for a drawdown and put them in, or I would be playing some upside capping on Amazon, doing some credit call spreads to the top side, or maybe just a little ratio spread above. Might work out very, very well, depending on how big your account is. Of course, Amazon is trading $22,000 position for 100 shares of stock. Joseph's getting in there. A couple little questions, so that's perfect. Let's just blast through there. That's what I love, when you guys are just putting in tickers. So XXB, which is the Home Builders ETF. Thank you so much. Appreciate that. That goes back a few minutes, but thank you, Joseph, for letting me know. And then there it is, trading at 101. 1 year chart 7.0, down 7%. And this is where I like these types of positions. I like to play the options on them. I haven't played this one actually since last year. So if I'm looking out a month, I might just do a very, very simple thing where I look, let's just change this to straddle view, and look at the 100. It trades at 286 right now. So 2.86% return for the August 15th for buying or selling the at the money put. So instead of buying stock, I could just collect 286 and have that 100 short put there. Very, very simplistic trade, but making 2.86% per month is fantastic if the stock trades sideways or up. Pretty simple, back to basics with a lot of these. And then John says, I got some nice leaps on NVIDIA after the DeepSeek drop off, and that was well worth it. Absolutely. If you guys are in a position where you think that the stock is going to drop down or go up considerably, trading spreads is great, but when we're looking at a position like this with NVIDIA, when it has a move like it has over the last while, owning the leaps is fantastic. It's well worth that decay that occurs. And NVIDIA has been on a tear, and will it continue? I mean, all-time highs again today. So pretty spectacular rise. Quant rating as a whole, the valuation is an F. If we were to look at NVIDIA you'll see that the fair value is way, way below, 13% below its current valuation of 170. So it's something to consider, that this is where when I'm looking at these charts, if we were to look at NVIDIA, there's NVIDIA, way outside of the range. And 131 is where that VWAP is. And what was the value that we just looked at here, which was Seeking Alpha, 147 fair value. So from a valuation standpoint, the calculation from the quant is here at 147, and point of control is at 135. So that might help you. That might help you, because I look at these things and I think, well, there's definitely room for a potential pullback to these levels. Dennis, if you were going with only one of these investment sites, which one would you recommend? It depends on what we're doing. If I want just base research, if I'm like looking for valuations based on what the current price is and where the potential price is, aside from the obvious, like looking at the stock chart, I would say that investing.com, that pro subscription is better than Seeking Alpha. I like both, but I like that there's an actual number with investing.com. So that's my favorite from a research standpoint. If I'm looking for option strategies and I'm trying to find stuff, ORATS is definitely above and beyond what anything else that I've seen in terms of looking for strategies and building out strategies. I wouldn't say it's the easiest to use, but there's definitely some value there. I am going to be doing some videos on their platform. I have been using it for a while, and I'm due for a call with them to kind of go over exactly my questions that I have, because I've been trading options and obviously teaching complex options for a long time. So when I first discovered it, I was like, wow, this is amazing. I find the day-to-day use of it is a little tiny bit difficult, and I probably spend a little bit more time per trade than I would like, but it is super valuable comparatively to anything else that I've seen. But maybe you guys have some other programs that I should check out, and this is part of like the building of what I'm doing in general, and the behind the scenes of the kind of research and stuff that I'm doing to make sure that I have the best resources to be able to provide to people. Pretty awesome. I have a cool partnership coming up. I'm not allowed to say anything yet because my contract says that I'm not allowed to, but this is going to be coming up in the next month. I am super, super excited about it. So you're going to see a ton of posting about this upcoming thing. And this all ties in with, the changes that are going to be made to my Patreon structure. And if you guys are watching this and thinking that now is the time to get in, or you've been on the fence, now is definitely the time to get involved, because changes are coming. Change is inevitable with anything. So I want to keep anybody that's in my service, there's no change, right? So once you're in, you're kind of locked into that level, and you can kind of hang out there, which is pretty awesome. I don't have much else to say, and it feels like lunchtime for me. It's 12 o'clock here. I'm going to push this button that says, let's get rich together. That's what we're trying to do. I'm going to get out to the farm, do some more heavy lifting. I did like 20 tons of steel this last week, and it's been back-breaking. Last night I was out in my shop till almost 11 o'clock unloading a massive lathe. Karina and I were doing it by ourselves, which seemed silly, but we got it done. And that's how life is right now. Hope you guys are having a great summer, relaxing and enjoying some sunshine, all those things. It would be great to meet up with some people in person, and I do have some exciting announcements. We're going to be doing some traveling here quite a bit in the coming month and a half. And again, details to follow. It's all related to finance and growing communities and being on the ground with people. So super excited to have you all along. Thanks so much, everyone. Take care. We'll see you next week. Bye. Can't find the button.